started. So today we're going to talk to you all about why, of course, I think some banks don't do a great job of explaining this, but how all income types can purchase a home. Okay, let's go ahead and get right into today's information. All right, so first things first, W 2 income. W 2 income. Okay, now this is the traditional employment that everyone's used to already. This the most common income type. Okay, so now lenders look for steady W 2 income, usually if you have a 2 year history. Now, that doesn't necessarily mean that you're going to get denied if you do not have a 2 year history, but they prefer to see that you have a 2 year history on your job. Okay. I'm going to get to that if you've been at your job less than 2 years a little bit deeper. Okay. Now, overall, they're trying to see that you actually have job stability. Okay. That's going to matter more than job hopping. What is job hopping? Okay. Now, job hopping is exactly what it sounds like, right? You go from one job to the next. Now, the lender is not saying that you can't look for more ways to increase your income. That's not what the lender is saying. What the lender is saying is that they want to make sure that you're not just staying at a job for a couple of months, then going to another job, different state, and that looks like you're unstable. Even if your income is a certain way and you're kind of just they want to make sure that you're able to commit to an actual company because again, they're letting you borrow hundreds of thousands of dollars. Okay. So again, that's what they're going to be looking for. So now what's a good amount of time on a job? There isn't really a set amount of time, but the longer the better, okay? For example, if you are at a company for let's say 1 year, then you go to another company and it's been another 1 year, is that technically job hopping? Well, you went from one job to the next, but you at least spent a year at that job, okay? But they're going to be looking a little bit deeper into why was there a job change? Sometimes the lender may ask you if you I'm sorry, they may tell you that you need to provide what they call an LOE. That's a letter of explanation. This is when they want you to explain why your income is the way it is, why you've been at your job as the amount of time that you've been at your job. Okay. Now, overtime, bonuses, and commissions, they do count. Okay. But overtime, bonuses, and commissions, they do count. Let me break this down further. Okay. Number one, let's go into overtime. Now, overtime income, they do count that income, but again, they know that everyone's overtime is going to be a little bit different. So some lenders are going to calculate that a little bit differently. Same thing with bonuses because it's not factored into your income unless you get a bonus every single month. Now, if it's a yearly bonus, that's a little bit different. Commissions, they count those differently as well. A lot of lenders, they take a certain amount of average of your commissions because they know commission based income can fluctuate. Okay. Then, of course, you have what they call the 6 month rule. Now, this was a big conversation, especially around COVID. What does this mean? This means that if you've been on your job 6 months or less, 6 months or less, okay, well, technically less than 6 months. Let's just say that if you've been in your job for less than 6 months, then you're not able to apply for home ownership unless you were at the previous job for more than 6 months. Okay, so let me give you an example here. Let's say that you right now is January. Okay, and what they're looking for really is a 6 month job gap. Okay, so for example, let's say you were working at a company. Let's say it was in November of last year. So you left that company in November, you were not working in December, and then you got a new job in January. Okay. That's less than 6 months. Therefore, you can continue with the home buying process. Now, if you've been at that previous job, even though you left in November, if you were at that previous job for less than 2 years, a little bit over 6 months, they may still ask you for a letter of explanation. Okay. So keep that in mind. Now, let me give you another way of looking at this. Let's say, for example, that the last time you were working was March of last year. That was almost a year ago. Since that was almost a year ago, that means you will not, it's not best to apply. You're more than likely going to get denied. Um, but they cannot move forward with your application in most cases until I should say until you've been at the new job for at least 6 months. Okay, so I'm gonna say that again. If you had a job gap longer than 6 months, between now, your current job, and your previous job, again, they're more than likely going to deny your application or make you wait essentially until you actually are at the new job, the current job, for 6 months, okay, or more. And of course, by that time, that anniversary will come, and then you can go ahead and apply. Okay. If that, and by the way, if that doesn't make sense, don't worry. We're going to be breaking down a lot of this inside of our home buyer challenge. Okay. We have a 90-day home buying challenge. Check this out. This is the number one home buyer program. Okay. I know there's a lot of programs out here. There are a lot, but let me tell you something. We break down what you need to do credit wise. So, how to increase your credit score, how to things that you need to learn for qualification. We answer your questions. You're going to talk to a lender. You're going to talk to an attorney. Either way, we're going to show you everything that you need to do to qualify for a home in 90 days or less. Okay. If you want to register for this event, you can scan the QR code right here on your screen, or you can text the word keys to 708-346-5613, or you can go to keysin90days.com. Okay, let's continue. Next is 1099 self-employment income. Self-employed buyers are judged on the net income after deductions. I'm going to do a lot of pausing because these are questions that we get all the time. By the way, just income in general. Okay. So now self-employed buyers, let's break this down. When you all are filing your taxes, and it's your line 31 schedule C. I don't know if it's still the same line. I think it's still the same line 31. Anyone that does taxes, confirm for me in the comments. But either way, line 31 schedule C, that number is your net income. That is the income that the lender is going to use when they are creating your pre-approval. Okay. So for example, if you're self-employed and your net income is, let's say, $20,000, I'm just being honest with you. You're going to struggle finding a home if that's the only income that we're putting on the application. Sidebar, you can put up to 3 people on an application. How many? 3 people on an application. Okay. Either way. So now I know some of you all are thinking, well, Calvin, sometimes my income just so happens to be around that range because, and I'm trying to, I don't know. I'll just leave it like that. So now I get why people, no, I won't say I get why people do it, but I've seen it very common. But here's the thing. Just know that if you're keeping your income low and you're taking a lot of deductions and you're bringing that net income down, that income is used for your buying power. Okay. So let me give you an example. You need to show $40,000 a year to be around about $200,000 in buying power in most areas. I know we got everybody nationwide watching us right now. So I'm saying that to say, if you're trying to buy a home that's around 300,000, you need to show about 55 to 60,000. Now, keep in mind again, how many people are going on the application. Okay. Because if one person makes 30, another person makes 30, that's $60,000 a year, then that's going to put you at that 300,000 mark or so, depending on taxes. Again, everyone's watching from different states. Okay. Next is going to be not your gross income. So they don't go by the highest number that the company made. Right now, they do that on W-2, even though you don't get that. But when you are self-employed, they go by that net income. Okay. Now, why is this an issue that people have? Well, here's another reason why. Sometimes people have a tax liability. That means that you owe the IRS, or you already owe the IRS and you're not on a payment plan. Here's the thing. If you currently owe the IRS, or if you file your taxes and you owe the IRS, you have until about March before they start to ask for these the tax forms for 2025. Right now they're taking 2023 and 2020. I'm sorry, 2024 and 2020. Well, no, that is right. 2023 and 2024, because now the tax season is pretty much it's now started, but it's not until about March or April that lenders really want to see 2025. Okay. But either way, prepare for it all together. But just know this. When you have that income in place, you have to make sure that if you have a tax liability, that you have made payments for at least I know, is it 3 months? 3 months. So for example, let's say that you have a tax liability and you haven't started a payment plan yet. You cannot continue with the pre-approval application to purchase a home. Okay. You must either pay them in full or start a payment plan. And then, even when you start the payment plan, you cannot apply for the home. You cannot start the home buying process until after your third consecutive monthly payment on that tax liability. You say, well, Calvin, I owe them now. Can I start the payment plan now? Yes, you can. Well, I owe them from years ago. Yes, you can still. Okay. So again, you have options. This is why you need to be at the 90-day home buying challenge. Okay. So here, matter of fact, I'm gonna put this at the bottom here just so you guys can see it. Okay. So you guys can actually get registered for that. I don't want to have to, keep reminding everybody, but okay, there you go. All right, next, writing everything off can hurt borrowing power, even if your business is profitable. What does that mean? A lot of times, you guys are writing a lot of things off. Now, I'm not a tax professional. You do whatever whatever you want to do. That's on you. But keep in mind, when you write off too much, that brings down your net income. Your net income is going to play a major role in determining your pre-approval amounts. Okay. They need to see how much income that you actually have coming in. Now, in our credit community, this is our 850 Club Elite. This is where the 90-day home buying challenge is actually going to be. Okay. We talk about tax strategies, not necessarily tax strategies as opposed to, I'm sorry, as it pertains to actual like deductions and things of that sort. We're more so making sure that everyone understands what the situation is. Another thing about 1099 is that now most lenders are they want to see 2 years tax returns if you're self-employed. So you have one, showing your income, two, getting on a payment plan. All right. And then, of course, number three, this is just a different section. This is number three is you cannot count self-employed income unless you've been doing that for 2 years. So let's say, for example, you start doing hair, you start driving Uber, you start doing DoorDash, you start doing Amazon Flex. I don't even know if they do still have Amazon Flex or whatever. But anything where you're bringing in an additional side income, you cannot use that income. You cannot use that income until you are putting yourself in a position where you can show that you've been doing it for 2 years. Now, there are some lenders. We have a lender as well too. This lender you'll actually be able to talk to during the 90-day home buying challenge. Either way, with our lender and a few others, they are, if your credit score is 680 or higher, then they can allow you to have that income for 1 year. Okay. So let me give you an example. Let's say you start driving for Uber, and it's been a year. Okay. If most lenders will not allow that additional income, they won't count that additional income towards your buying power. All right. Now you are not forced to include this income. I want to be clear. But there are some people where 100% of their income is self-employment income. And I'm going to get into some other income types as we continue on. Okay. So either way, don't want to confuse, don't want to confuse you all. But again, if you have questions, this is what a 9-day challenge is all about. Okay. But either way, that's how they do it. All right. Next, now in our credit community, like I mentioned, we break all that down. So let me go back to the other example where I talked about if you had it for a year. Now, it's going to be easier if you've had it for 2 years, and that's even if you have multiple incomes. So let's say, for example, you drive for Uber, you drive for DoorDash, you drive for or whatever, you do hair, whatever that is. Again, you're not forced to say that these are all your incomes if you don't want to, but it does make the process a lot easier. Okay, especially the larger portions of your income. All right. So now let's say, for example, you know what? Hey, Calvin, is there a way where I don't have to provide tax returns at all? The answer is yes. Okay. So how can you do that? Let me tell you. So you need to put down 10%. If you do not want to provide tax returns, you have to put down 10%. Okay. So again, if you do not want to provide tax returns, you have to put down 10%. All right. So now let's keep going. All right. Is this good information? Yes or yes? Let me know inside the comments section below. All right. Now let's go to the next section. Gig economy, side hustle income. This falls under 1099, but I wanted to make sure that people understood that the reason why it falls under 1099 is because that's considered freelance income. Okay. That's considered freelance income. So freelance income, that's going to be, like I mentioned earlier, that's going to be Uber, DoorDash, YouTube, Etsy. Freelance income can count, and it shows consistency and a 2-year trend. Okay. So again, 2 years is what most lenders are going to be looking for But if you have a credit score of 680, there are some lenders that would allow you to have that income if you've been doing it for at least a full year. Now you say, well, Calvin, I got my job and I've only been doing Uber for like 7 months. Can I count that income? The answer is no. Okay. Or another question is, hey, Calvin, you know what? I really don't even want them to be involved with my side income. Do I have to put it on my application? The answer is no, you do not have to. Okay. Next, lenders want proof through tax returns, bank statements, not screenshots of payouts. Here's the thing. I want you all to know something like this. Here's the thing. People, when people provide proof of income, we've seen the craziest things. Like when people say proof of income, they'll be like showing photos of the money. Like, no, 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 no. Proof of income is not a picture of your money. I know it sounds crazy, but people actually do this. Anyway, just letting you all know, they will be looking for bank statements and tax returns. But again, 10% down if you do not want to provide that. Okay, let's keep going. All right. Next. Okay. Next is going to be rental income. Now, this is current or future. What's rental income? This is when you actually rent something out and you have money coming in. Notice I said something. It doesn't have to be a property. It could. Some people have a lot of different types of rental incomes that are coming in. Okay, so but preferably, well, I don't say preferably, but most popular is going to be property, rents that comes in every single month from tenants and such. Okay, but existing rental income can be used if documented. What's documented? That means you have a signed lease. That means you have it going to a business account. That means you essentially you have electronic payments are easier to track. If you do take cash, that's fine, but now you have to provide receipts. And if you have receipts, that means that the assumption is you're also depositing that into a bank account. Okay. So you are able to do that. Now, let me pause real quick right here, too, because the next piece is future rental income may count as well, too. Let me break this down. Let's say, for example, you are looking to purchase a 2 unit, 3 unit, or 4 unit property. Now, I know we have different states watching this. So some of you all in Chicago, of course, they call them flats. I like to say units because that's more national. Okay, when I do talk, because I know everyone's in different areas here, but I know some of you all may call them a plex, like a threeplex or a fourplex, whatever you want to call it. These are essentially multi-family units. Okay, let's say, for example, you're looking to purchase a 2 unit, 3 unit, or 4 unit. They're going to count your income currently, and the lender is going to count your future expected income based on the average rent in the area. Let me give you an example. Let's say you want to purchase a 2 unit property. You're going to be living in a unit and you're going to have a tenant living in the other unit. This is also known as house hacking, when you're taking the amount of money from the rental units and you're applying that towards the mortgage. Not long ago, that used to pay off a whole mortgage. Anyway, and in certain areas and certain maths, it most definitely can work out too. But either way, let's say, for example, you're doing it. You're buying a 2 unit property, you're living in 1 unit, and you're collecting, let's say, $1,500 a month on the other unit. They're going to count that expected $1,500 a month. Okay. And some lenders take a percentage of that and some use the entire amount. And they're going to apply that towards your buying power. Okay. Now you're probably saying, well, Calvin, that doesn't make sense. I'm not collecting that money. Yes. But you're buying a property and the bank is assuming that you're buying this property. So assuming that you're going to rent out the other unit, because why else would a person purchase a 2 unit property? Right. So that's the assumption, regardless of what you do. Then now, when you do that, that's going to increase your buying power. Usually it increases it on average about somewhere between 25 to 35,000 per unit. Okay. So for example, if you were looking to purchase a single family home and your pre-approvals, let's say 250,000, but now you're also open to a 2 unit property. So usually on average about 25 to 35, let's say $30,000 in additional buying power. So now you went from 280, sorry, it's from 250 to now 280 as your new buying power. But again, only if it's a 2 unit property. I hope I didn't lose anybody. Okay. So that's how they apply your rental income. So if you're collecting it, you can add it. Even if you're not collecting it yet and you're looking for a multi-unit property, this is how you do it. Okay. I'm telling you, this is stuff that banks don't be explaining. I'm telling you. All right. Next, many buyers don't realize rental income can offset mortgage payments in underwriting. What does that mean? If you have a lot of student loans, let's say, what is a lot? Let me use a better words. If you're, I don't want to spend too much time on student loans, but the short version is your annual income, gross income, needs to be more than your student loan balance. If it's not, that doesn't mean you can't purchase. Because remember, we can have three people on a mortgage application, with most lenders. Saying that to say again, you need to know that if you have student loans, it's going to affect certain things. The short version is again making sure that your annual income. So, for example, let's say you got $50,000 worth of student loans, your income needs to be more than 50,000. Now, does it have to be? No, that doesn't necessarily mean you're going to get denied either, but it just makes the process easier if I can give you an equation to kind of live by in a sense. Okay. But if you have $80,000 with student loans and your income is $30,000 a year, you're going to have that's going to affect your buying power. That doesn't mean that you cannot buy. That just means it's going to affect your buying power. But I've seen people with $200,000 worth of student loans, income's $40,000 a year. That person may not be able to qualify. But keep in mind, that's a single family home. So if you consider a 2 unit, a 3 unit property, a 4 unit property, now they're adding in all of that future income, right? That future income that's expected. And then they apply that towards your buying power. Now you went from denied to approved. See, it's hacks like this, it's strategies like this, it's conversations like this. This is how we're showing so many people how to get into home ownership, because no matter what you're trying to do, we have a strategy for you. Okay. Either way, let's continue on. All right. Next, Social Security, disability, and fixed income. Okay. So now next, this is going to be Social Security and disability income can qualify and may even be increased, okay, or grossed up to increase buying power. Here's why. Some lenders, in my opinion, don't calculate it a certain way, or at least they don't explain it a certain way. So here's the thing about Social Security disability income. So when you are looking at this amount, they go by the top number. Sometimes people have deductions from that number, but they go by that gross number and they know that it's guaranteed. Well, essentially, it's a guaranteed income. Sometimes they will ask for paperwork, especially if you have, let's say you get money from the state. This counts too. So if you get money from the state and you're taking care of someone's child, or anything that comes from that Social Security, disability, fixed income, state, provided income, something, anything that's like that, they need to see some type of proof, something that's recent. So they want to see deposits. They want to see if you've gotten something. And we're gonna get into child support here shortly. Yes, we're gonna get into child support. Make sure y'all take care of them kids. But either way, that's so yes, it does count. And it doesn't matter if it's your only income or if it is, addition to, because some people are getting a pension, some people are still working, and they have that Social Security. Yes, you can count that as additional income. Okay. Same thing with disability, fixed income, state income. Next, these income types are often more stable than employment income in a lender's eyes, because it's coming from a reliable source and they know you're going to be getting it for a certain amount of time. Okay. Let's keep going. Child supports. I know y'all love to talk about child support, right? Take care of them kids. So either way, child support income. You can count child support income. It is additional income. Okay. This income can count, but only if it's court ordered. Let me pause right there. There are some lenders where even if it's not court ordered and someone is giving you money on a schedule, frequent basis, and if you can show some paperwork, like if you all have a written agreement or something like that, there are lenders that will say yes to that. Okay. So just so you know, there are lenders that will approve that income type. Okay. But again, most child support is usually typically court ordered, and you have some type of agreement, and you have to usually get that in writing as well too. And it's going to be easier if you can, so you can count that income. Sometimes lenders don't just go by deposits. They need to see what the amount is going to be if you want to include that in the application. I'm sorry, if you want to include that in the income in the application that you provide to the lender. Okay. So again, you don't have to if you don't want to, but it will increase your buying power. All right. And expect it to continue for at least 3 years. This is key, because some people are getting child support and it's about to get cut off, right? In a year, 2 years, 3 years. So keep that in mind. Inconsistent deposits or missing documentation can cause an automatic denial, not on the application itself, but a denial of that additional income. Okay. Same thing with alimony income as well too. You need to make sure that things are in writing and that it's coming on a certain set schedule if you want to count that income, and the amount is not too small or anything like that. Now let's go into business income from multiple streams. Okay. So let's say you have, like I mentioned earlier, you have DoorDash, you got Uber Eats, you got a website, whatever that is, multiple income sources can help or hurt depending on how cleanly they're reported. What does that mean? What does that mean? Every business that you have needs to go into, well, let me rephrase that. Every business income, side hustle, whatever you want to call it, anything that's not a W 2, that income needs to go to a business account. Now, if you have, let's say you have three sources of income, you have your main job, you drive for Uber, and you drive for Lyft. Okay. Now you need to, if I were you, I would just have the LLC. And then, of course, that's my transportation company, whatever you want to call it. Now that is the business account. And then, of course, when I get paid from Uber, when I get paid from Lyft, they all go to my transportation company. Okay. That's the easiest way to do it because now I have business income because it's a business, no matter what you want to call it, that is a business. Okay. That needs to go into a business account. That way you'll be able to show statements. You'll be able to show P&Ls. You'll be able to show all of these things. Okay. P&Ls as profit and loss. So of course you're probably thinking, well, I don't have any expenses. Yes, you do. Then that's maintenance that you're writing off, I'm sure. That's also, obviously gas, things of that sort. So all of that plays a role. And that's why you need to make sure that it's clean. But if you're doing DoorDash, if you're doing Uber and it's going into your personal account, you all messed up. Okay. So that doesn't mean that you can't count it. That just means that you're gonna have to explain a lot of stuff and you're gonna be nitpicking these little things. I mean, banks can, they are human, so they can see that, what the source is. So keep that in mind. Okay. But lenders care about patterns, not hustle culture, as we like to call it. So they don't care that you got two, three, four, five, six different incomes coming in. That's not what it is. They want to make sure that it's clean, that they can report it, and that the paperwork matches what you say. Because I know you don't believe it, but people lie on applications. Okay. So you want to make sure those things are, talked about. Now, we're going to get into some of the questions I see here as well, too. Not all, but some. Okay. Now, here's another thing, too. Where is it? Oh, there he is. Oh, I missed the T right here. All right. So now here's the thing. Let's go into two different things: credit score and income. Okay. Your credit score and income, because some of us need a reality check. Okay. Just because you're making good money, okay, a high income doesn't guarantee approval if credit is weak or mismanaged. High income, let's just cut it where it's at. Let's say six figures. Now I know some of you always may say, well, Calvin, six figures ain't gonna do nothing for me. I know, listen, I know we have different states on here. Okay. But some people live in different areas. Some people have different, income levels. But what they look at when they say high income, well, I mean high income because I was be half a million or whatever the case may be. But when they say high income, they're more so talking about six figures as it pertains to home ownership, depending on what area that you're in. But if you're not in a higher end area, like California, New York, some areas of DMV, stuff like that, then the high income is going to be assumed 100K, right? And of course, it can always get higher. But my point is, regardless of what you consider high income, it doesn't guarantee your approval, regardless if you're making a million, half a million, six figures, 80 grand. Okay. If your credit is not where it needs to be, okay, then, or if it's mismanaged, if your score is not there, you're not going to get approved anyway. Okay. Moderate income with strong credit is going to rent. Moderate income with strong credit is going to win every single time, guys. I'm telling you, it's going to win. Okay. Next is timing matters more than people think. So we had a client where they were excuse me, they were transitioning from a W-2 to 1099. Remember what I said earlier. When you are 1099, the income does not count unless you've been there for 2 years with most lenders. But my lender allows you to be with your with that employer for 1 year if you want to count that. But that's only if the credit score is 680 or higher. Okay. By the way, my lender can work with anyone nationwide, so let us know if you're interested. So now, here's the thing. If you have the option to go between either W-2 or 1099 for the purpose of homeownership, W-2 is going to be the easiest. Now, don't just switch without having a conversation with us, okay? My team can help you, and we'll go into that a little bit later. But either way, that's how you want to do it, okay? Because applying too early or too late, it can change how your income is calculated. For example, if you have a commission-based job and it's slow right now, that doesn't mean that you can't get approved for a home, but you may need to wait until you get some commission checks coming in so they could calculate that and do an average on that income. Okay. Income timing impacts debt to income ratios more than most buyers realize. Okay. So again, If you're not sure when to apply, that's where we come in to let you know. Okay. So now here's the thing, guys. I know what you're thinking. Well, Calvin, all this sounds good, but have you really helped a lot of people? You don't understand my scenario. You don't understand my situation. I need to know for sure. Can you help me get into a home? The answer is yes. We don't care what your situation is. We don't care what your race is. We don't care what your age is. You're the only one stopping yourself from you. Now, don't get me wrong. I want to be clear. I know everyone's not interested in home ownership, but if you've been watching this video for this long, you might be interested in home ownership. And it's nothing wrong with that. We have got to stop bashing people for being interested in home ownership and also not being interested in home ownership. This is not for everybody. If it is one of the goals you want to accomplish, then I'm telling you something. We can make it happen, just like we help these people right here in front of you. Listen, guys, this is how you get registered for the event. There's 3 ways that you can get registered for the event. Okay. Number one is keysin90days.com, or you can scan the QR code. Now, registration is closing. Okay. This is why I wanted to remind you all, because registration is closing. You can also text the word keys, as KEYS, to 708-346-5613. But again, guys, listen, we can help you just like we helped all of these people right here and so many others as well. All right. So now I do see a couple of questions here. Let me see here. Morning Joy's in the house. South Carolina's in the building. All right. So check this out. Big Nas says, what about veterans? And Del Monte asks about a VA loan as well, too. So check this out, guys. You only need a 580 credit score. If you're not at a 580 and you have access to a VA loan, listen, let me tell you something. Let me tell you something. You need to get there ASAP. You need to get there ASAP. Some of you all right now can change your living situation, and you want to change your living situation, and you don't have to put down any money as far as the down payment is concerned, okay, to go into home ownership, up to 4 units, by the way. And if you structure the deal a certain way, the seller will be willing to help out, and that further reduces what you have to bring to the closing table. So again, this is how you maximize this. We need to get the credit score up, okay? And of course, I have one of the best lenders in the nation that I work with that can also work with veteran administration loans nationwide. Even if you're not a veteran, guys, nation just in general. Of course, you can't use a VA loan if you're not a veteran. But my point is, you don't have to be a veteran to work with us and my team. Okay, so we need to get your scores up where it needs to be, so you can take advantage of that. There are people right now that are struggling. Well, no, I won't say struggling, but they're in a bad living situation and they're just dealing with the situation. And the entire time they have access to a VA loan. Some of you all right now, your uncle is complaining about his living situation. Your auntie is complaining, your sister, your brother, somebody you know, probably you, and you're not taking advantage of that VA loan, guys. We need to talk about that. We need to put you in position. Okay. So either way, Grapes God says, thanks for making this accessible. Absolutely. So here's the thing, guys. I'm going to give you all deeper content. No more, I won't say no more surface level, but I'm gonna always have my basic level, entry level credit videos. Those are not going to stop. That's the heartbeat of the company. But there's sometimes we need to have a deeper conversation. We need to go deeper than this. But I don't want to just educate you. Okay. I want to help you get into action in 2026. That's all I want to do. I want to show you exactly what you need to do and what you need to do step by step to go into home ownership. Okay. This is the #1 home buyer program. We break down everything, increasing your credit score. Just so you know, everyone that joins my challenge gets a custom game plan. What does that mean? That means we look at your credit report and we tell you exactly what you need to do to qualify for home ownership. Okay. It doesn't matter what your situation is. I don't care if you're in the 300s, the 400s, the 500s. I don't care if you just start working your job. I don't care if you just signed a lease. You still can join the night. You will still qualify for a home in 90 days, whether you want to buy in 90 days or not. You say, well, Calvin, I don't want to buy until next year. You will still qualify in 90 days. Well, Calvin, I just signed a lease. You will still qualify in 90 days. Well, Calvin, I just filed bankruptcy. You might not qualify in 90 days. Yeah, depending on if it was a chapter 7. Okay, now because again, everyone's situation is a little bit different, but this is why we need to go deeper. Okay, so in these next few days, I'm going to be breaking down different topics because we get these questions all the time. Every day we get questions. Okay, and I want to break this stuff down. So Now, here's another thing too. Share this video with people too. Okay. If you know people are looking to go into home ownership. Okay. But you all are very welcome. Tennessee, yes, we can help you for sure. Del Monte says a 4 unit. Come on, man. Listen, we're gonna make that happen. Okay. So he says, I keep getting the okie doke. Here's the thing. It's what I like to call right activity, wrong team. That you wanting to go into homeownership, you wanting to own property, that's the right activity. But at the same time, here's the thing is that you're just working with the wrong team. And I listen, not in a bad way. People, listen, we don't know what we don't know. I'm sure they want to help you, but they don't know what you need to do in order to qualify sometimes. Just because they work at the bank doesn't mean they understand credit. Not all lenders have to really understand credit, not in a bad way, but it's not like, a lot of times the computers tell them what they need to do. The computer is going off of generalized information. It's not really giving you a strategy. It's not going to name drop. It's not going to say, hey, get a Capital One card tomorrow. It's not going to say, get a Navy Federal, pledge loan. It's not going to tell you that. We will let you know if you need to get a secure credit card. We will let you know if you need to get a credit builder. We will let you know if we need to get your rental payment history added to your credit report. We will show you how to do these things so you can qualify for homeownership, guys. Listen, I'll see you all in a 90-day challenge. Registration is closing. If you're serious about homeownership, this is where